Let's discuss the Bitcoin price accelerating 100x from here, according to the one and only MicroStrategy founder, Michael Saylor, the Giga Chad himself. So here we go. Bitcoin will 100x. Here's why. And shout out to the one and only Michael Saylor. He believes that the writing is on the wall. Let me know if you agree with him. We can all see the tsunami of institutional money that is about to come for Bitcoin. And for the first time in history, we have the opportunity to front run it. But again, that window of opportunity is closing, fam. So seize the moment, take advantage of it while you still can. In his latest interview, Michael Saylor breaks down why he has so much conviction the Bitcoin is going to 100x and what major catalysts as to why. Saylor believes the coming spot Bitcoin ETFs are inevitable and is already looking forward to the next major catalyst. That's right. He believes it'll be major banks embracing Bitcoin. First, he argues they will become custodians and then they'll begin offering financing and collateral for Bitcoin. Make sure to stick around to the end and we'll get even more insights as I actually transcribe some of his interviews myself. Here you go. Quoting him here, Bitcoin is an asset class and that's a major revolution. If Fidelity and BlackRock and if 10 other ETF issuers all agree the Bitcoin is an asset class, which it is, fam, it should be 10x to 100x bigger than it is right now. Run the math of roughly 36,000, which we're on the cusp of reclaiming here. That's 360,000 per Bitcoin. And if you do 100x times 36,000, that's $3.6 million per BTC. Let me know if you agree or disagree with the Giga Chad. Now, I also transcribed some other interview he did, and Michael Saylor talks about BlackRock, Citadel, and Fidelity sending Bitcoin to $1 million. Quoting him here, it looks like a spot ETF will probably get approved. Amen. The writing's on the wall, right? There is massive political pressure to approve one. The circumstances have changed. And now there is a way for the SEC to approve it without backtracking on its previous legal and policy guidance. Now, certainly there are a lot of Wall Street entities that have a vested interest in seeing this happen. Preach. If you're an institution, one way to get Bitcoin exposure is to buy the underlying asset, but there have been challenges with finding the right exchange to buy it on and custody arrangement. So a simpler way to do so, simply buy the spot ETF. There are trillions of dollars in capital that is required to invest in security that trades in these compliant forums and is understating the obvious. There's tens of trillions of dollars. So that's a lot of capital that can't buy Bitcoin or self-custody the Bitcoin. They don't want to do charter. Maybe it's against the tax code. Maybe when they raised $10 billion from the public investors, they raised it to invest in securities, but not interested in property or commodities. So the spot ETF availability is a major milestone for institutional adoption. The approval of a spot ETF is a major milestone in regulatory clarity, which is tantamount to an endorsement. The engagement of Fidelity, Citadel, BlackRock, and Schwab. I mean, Schwab is synonymous with Wall Street, 100 years of Wall Street. So what you have is Wall Street coming together to offer securities and exchange services indirectly with custody services for mainstream investors. And if we look out about 12 months, and if I was saying, what are the key milestones that drive the mainstream adoption of Bitcoin? Well, one of them clearly is the spot ETF. The second is the designation that Bitcoin is an asset class, which we all know it is, right? Now, the recognition of the legitimate commodity is a big deal. When you got Jay Powell saying it's not going away, when Gary Gensler, the head of the SEC and the CFTC both say it's a digital commodity, which it is one of the only cryptos with the green light, right? Digital commodity might not sound like much, but when you go down the next round, like, is it a Ponzi scheme or is it a scam? Is it tulip bulbs? The difference between tulips and a digital commodity is a 0 versus a 1. Preach. I have said before and I'll repeat it again. Listen up, fam. If it is not going to 0, it's going to $1 million per coin. It is either nothing, and if it's nothing, then it's getting scrubbed out and banned. And of course, we know it's not getting banned. There is no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this. They are not endorsing a tulip bulb, right? Now, once you go from 0 to 1, then the question is, well, it's an asset class. And if it's not going away, well, what's it worth? Well, it's worth 1% of the assets in the world. So 1% drives it up by a factor of 10 to 20. So there you have it. My crypto fam coming directly from Michael Saylor. Let me know if you agree or disagree with the Giga Chad.